Most people say you can't time the market. I say you have to. I'm Scott Redler, Chief Strategic Officer for T3 Live. I would like to invite you to an exclusive swing trading event in Newport Beach, California on Saturday, February 23rd. Students will learn the 5 keys to becoming a successful swing trader and how to navigate the market using what I call a portfolio approach when it's conducive in the market. Reserve your seat at t3live.com or call our toll-free number 1-888-99-T3Live.
Good afternoon, everyone. This is John Darcy, Editor-in-Chief, here to bring you the daily recap. We got a few of the guys traveling out in California. As you saw the graphic before the open, we have the Newport Beach Active Trader Summit tomorrow. So if you're in the area, it's getting a little late now, but if you got nothing to do, definitely stop by. You're going to have Scott Redler, Robert Wahlberg, and Pete Renzulli giving some great presentations based around swing trading. So we'll make it short and sweet for the recap today. The market reproved itself a little bit after 2 days of heavy selling. You saw the S&P sell 30 handles off the highs. You saw bears sort of pounding their chest. They finally had their day. But then what do you see? You see market rip right back in their face. So if the bears did get greedy and tried to hold shorts for anything more than a little 2-day pullback, they got a little bit hurt today. If you go to the chart of the spiders, you can see we had that 2-day pullback off the highs. This day, on Wednesday, it was the Fed minutes sort of triggered that downside as the Fed got a little bit more hawkish and talked about the potential end of QE at some point this year or some point in the near future. Then yesterday we saw a gap down and we sort of bled lower the rest of the day. You saw the spiders close below their 21-day moving average as well. And like I talked about this morning, what we really look for is how long and how far an index or a stock holds below its key moving averages when it breaks. So you saw the spiders, it did close below its 21-day, but then we're on alert. We say, how many days is it going to hold below that moving average? The more time that it spends below there, the greater conviction we'll have for potential more downside. But today we reversed right back above the 21-day and we closed above the 8-day again. So, if we gap up and go on Monday, it could be just business as usual for this rally, and we could be, back towards highs again. And, we talk about the macro trend remains very much to the upside. The last 2 days, it was the heaviest selling we had this year, so it sort of felt like the market was crashing a little bit. If you read Twitter or you read the blogosphere, it sounded like the world was coming to an end because we pulled in 30 handles on the spiders. But you got to put everything in perspective, zoom out, and in a macro uptrend, don't try to get too aggressive to the short side. Take your trades quickly, and we're right back going to the upside. We'll take a look at a couple sectors I talked about this morning on the morning call. Look at the XLF. That's been a leading sector in the market for most of the last year. You saw it also reverse back above its 8-day moving average. You look at Goldman Sachs, which has been the strongest group in the sector. We talked about that held above its 21-day yesterday. It was also able to climb back above its 8-day. This is the type of stock that I would be looking to buy on dips. It's the strong stocks. You don't want to be looking to bottom fish during a correction. You want to be looking to play those strong stocks. Another one, we'll look at Bank of America real quickly because that's the one Scott's been playing, but that one hasn't behaved as well. Today it wasn't able to climb back above its 50-day moving average after some heavy early selling. I think, if Scott was here, he would tell you this. He's been traveling today, but I would look to shift gears a little bit more into some of the stronger banks right now for Bank of America. Sometimes it has its moments and it breaks out when you get rotation within the sector, but right now Goldman looks a lot better, and so does JP Morgan, but we won't look at that chart. We'll take a look at Google, which we talked about as another one that you should potentially be looking to buy on dips. It's been a strong stock, holding at all-time highs or near all-time highs. With talk about retail stores opening and the Google Glasses coming out and them unveiling their premium Pixel laptop that has a lot of people buzzing, that's sort of going to compete in that same price range with the very premium Apple MacBooks. You saw Google today opened higher, didn't really do much intraday. It was a little, had a little sell-off after the open. But was able to close right about where it opened for a little bit of a doji candlestick there. But I think Google, very healthy, and I think it can continue higher if you see the market firm up, obviously. We'll look at LinkedIn. It's another one we talked about this morning in tech that has been a strong tech stock. You also saw it behave well. It held above its 8-day yesterday, showing a lot of strength in the face of market weakness. Today, had a nice up day after the gap up. Nothing explosive, but it was a Friday, so I think you should, if you were playing this alongside, you should be happy that you got that much of a move on a Friday in what has been a quiet market this year. We'll take a look at the 3D printers, which I also talked about this morning. They opened significantly higher and were able to rally during the session. I think the important thing to consider is that Triple D has earnings on Monday. These sectors, they don't have a ton of earnings expectations. A lot of the price action that you've seen in the 3D printers is based on far into the future about what 3D printing could become. It could become something that sort of revolutionizes the manufacturing industry. As you could, like I talked about this morning, people think that one day maybe you could be able to print food and you could be able to print body parts and print all these types of things that will become very critical in manufacturing. But the question I pose is, what if 3D printers can start to print other 3D printers? Then the 3D printing business is going to be in a little bit of trouble. But anyways, getting back to the chart, you see Triple D was able to bounce back today, sort of offsetting some of what could have been lowered expectations going into Monday's earnings, but now it's, we'll have to see how it reacts to that report, which comes before the open on Monday. I know the momentum traders, Mike Lee and Steve LeBay, will be watching Triple D and SSYS closely, so I would assume they would continue to be in play after that earnings report. You look at SSYS, that was also able to bounce today, nothing ferocious. It wasn't even able to close back above yesterday's high or yesterday's opening price. SSYS, if you're going to be looking to short bounces on the 3D printers, which I don't necessarily think is a bad idea at all, I think SSYS would be your best candidate for that. You see those moving averages, those short-term moving averages curling down, potentially knocking that stock down. The last thing we'll talk about is gold, which I also mentioned this morning. Gold is a little bit quiet today. It might settle back down after those Fed minutes, but it seems to have found its footing a little bit and stopped the bleeding after those more hawkish Fed minutes. But if it does continue to flag in this area and it's not able to put in a significant bounce and reclaim, I would say yesterday's opening price or Wednesday's opening price and then the gap from Wednesday, I think you could see gold pressured further to the downside. We'll zoom out a little bit to give you a more macro picture like we did this morning. And this is obviously the huge level for gold for GLD. If we were to test that area, it'd be very interesting to see whether we got any type of bounce or whether we flagged at that area and saw a major complexion change in gold. So central banking activities will have a lot to do with that. So that'll be something to pay attention to on a more macro scale. And that'll do it for today's daily recap. Hopefully you had a good week. You saw volatility increase a little bit with that 2-day pull-in, and I think traders on both sides, both bulls and bears, will be welcoming that volatility and they'll be hoping that the action loosens up a little bit and you're able to trade a little bit more stock-specific type approach and hopefully make some profits. This is John Darcy here with the Daily Recap. Everyone have a great weekend.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.